Okay, so I just started recording. We'll get going right now. There's a bunch of us in here already. What I want to just talk about is I'll go through some analysis and let's just clarify some things. A lot of questions I do get from people on a daily basis is, where's this currency pair? Where should I take a trade? Where should I exit a trade? I know I wrote a document on that, but I think if we sort of work through this right now as a group, it'll get you some ideas of, what we're doing and how to go about your trades. I think a lot of people make the mistake of trying to make a trade based on information that they have instead of potentially, taking advantage of, say, a like a pending trade or something similar to that. So I want to try and talk a little bit more about the analysis perspective and what you're doing in terms of things that we're working on right now as a group. When you look at the overall picture, like I mean, once again, I just pulled up a random chart. This is like the USD JPY 1 hour chart. I mean, technically speaking, I would flip over to the 4 hour, and I've already sort of had some markups from previous information that I was using, and similar to what we always talk about in terms of the overall trend, when you look at this chart right now as it stands, you don't have enough information. I think when you look at this chart right now, I'm looking at it for the first time this morning, similar to what you guys are looking at. I see that we are in a downtrend, right? So I mean, right away, the first thing that I want to look at is essentially we are in a downtrend overall. So I mean, if you just throw like a simple trend line, you can see right away we're in a downtrend. The thing is now people always ask me, zones, things like that, like where am I looking at zones? Well, as an example, relatively quickly, I mean, you can do zones on your MT4 if you want. Basically, if you go into shapes and rectangle, I can see like right over here as an example, like that's probably a zone. Like this little section over here is a zone. And then what I would say is if I go and I insert shapes again, um, I'd be looking sort of to say like this was a zone. And when you look at that, I mean, I should extend it a little bit more. Objects list. Like if I extend it a little bit more, you can see that we've tapped um, we've tapped into these two regions, but more importantly, those two regions are your support and resistance areas, right? So, right away, if you turn around and you look at these regions as a whole, and you can see these lines. I mean, now let me change the line first here. See if that helps. So, if you see these lines as an example. um, So we have those two lines, and right away what you can see is those would be technically your support and resistance lines previously for USD JPY in the 4 hour. So we know a few things, and this is something that you have to remind yourself when you're doing your analysis. That as an example, if we're looking to say, okay, we believe that in this section over here, USD JPY is going to break support and it's going to continue in a downtrend, because when we turn around and we look at the overall view and when we zoom out a bit, um, you can see essentially that we've dropped through and then we have a full downtrend. So when you draw out your ranges, and that's when I talk to people about ranges, when you look at the range that we have here, as an example, you can see right away your range is, a good 1,000 pips. And what I mean by range, once again, is you're at 111, like 374, and you're now at 110, 294. So you basically have, like, I would say 110 pips pips or 1100 pips, depending on if you're doing it. So 1100 mini pips, right? So when you're looking at this section over here and you're saying, okay, I have my support and my resistance, everybody's in such a hurry to say, okay, I want to, trade and I'm going to enter a trade. Where's my confirm? It's not necessarily looking for a specific confirmation. And a lot of people always ask me is like, should I take a trade on one or two candle confirms, or how should I do that? But it's understanding your range, and it's understanding where we see, these zones, which are, I would say, supply and demand zones, or you can just call them zones, but also more importantly, your support and resistance lines, where we're getting those taps for that information. So when we start to look at a chart and we start to take a look and say, okay, where are we going? Right away, we have a number of confluences to help us. Okay, so when we recap how we're doing our analysis, we're saying, okay, we're already in a downtrend, right? So we're already in a downtrend. We've sort of mapped out a simple trend line to point us in the down direction, but we've also mapped out what we consider like a supply and demand zone. So now when we actually start to move into our next level, you can see now, okay, I want to start moving into our next level, and now what am I looking to do? I'm looking to do the similar thing here, and I'm looking to figure out where we're getting multiple touches. Now, right away, when you look at what we've got, what I just did as a, on the fly, I'm starting to map out where I think we have, a bit of support. The reason why I say that is because I want to gauge where we're tapping a zone, so that I know what to do in terms of how to, sort of move about for this week, right? So right away, I can see something of interest, right? So if I turned around, I'm going to delete this line for a second because I want to go through, let me see if I can get rid of this too. Okay, I can't get rid of that one. I should be able to get rid of it. Yeah, here we are. So right away, if I turn around and take a look again and do a similar scenario, what I'm looking for right now is I'm looking for what I just had in that scenario in the same scenario over here. Give me a second. Yeah. Someone was helping me out because I don't draw rectangles normally on my screen. But what I'm going to look for right away in this first instance is I'm going to look for my first sort of what I consider a key zone. And the reason why I would consider it a key zone or something of importance is it's where that zone starts the next set of moves. And we never go back really to that zone unless to tap it and then move forward. So as an example, once again, if we start to draw out our zone for this week, what I'm going to look for is shapes. I'm looking right over here in this region. Rodney just said click. Oh, that works. So I'm looking in this region here, and the reason why I'm looking in that region is because once again, what's happened is we've had a touch over here, and then we've had a drop. So there's been a big push up and then a drop, but you can see as you start to go left, you have this over here as a previous zone. Okay, and that's when I'm talking to people, and when I do my analysis, what I'm looking for is I'm looking left. Ideally, what I'm looking to see is I'm looking to see if there's somewhat of a pattern in terms of where zones were touched, because you can clearly see here, if you were to box that out, that price was rejected, it pushed up, then it tapped back into that area again, pushed up, then tapped back again, pushed up, but then more importantly, when it came back down to tap in this area, which is still in this section here, we pulled. So this is what I'm looking for, and this is sort of an interest point for me, is because I start to see that that's the pattern here. So now when we start to tap in this first zone, we pull down, we tap a bit up over here, now we pull down, which could potentially be a new zone, we pull up, and then we pull back down, we've pulled up again, and now we're starting to pull back down. So what does that tell me? Essentially, you have a pattern, and this is where I'm saying when you check your shorter time frames, you're looking for this pattern. You're looking to see that, okay, I could draw out a mini support and resistance, and that's the information that I would get. I would get the fact that we're up, down, up, down, up, down. We should probably go back to this region over here. So if I'm looking to turn around and say, okay, what do I want to do in terms of my analysis and how do I want to approach this? What I'm saying now is I've got an idea based from the previous example. So I've taken this idea over here of down, up, down, up, down. I've taken that idea, and now what I'm doing is I'm looking to see a similar idea again, and I'm looking for the pattern to repeat. So when you guys are doing your analysis, so right away what I would say is I would draw something very quickly. Here's probably a resistance area, and then here would be, I would say, almost like your support area. It's subjective once again, but what I want to do is I want to frame this information to give myself an advantage to say, okay, if I look at what we have in terms of range, right away I can see my range, and we look at the numbers. You can see you're at 109,329, and you're also now at 108,386. So right away from here to here, you have basically 100 standard pips. Okay, so once again, I have a huge range. I have 1,000 pip range. So I don't need to worry about this candle right here, what's happening, because in all fairness, we've sort of seen the pattern. We're up, down, we've tapped into a zone, come back down, tapped into the zone again, gone in, tapped probably the upper end of the zone, and now we're starting to push back down. So where are we going to tap next? More than likely this area over here. This is just sort of the rudimentary idea that I come up with when I'm doing my analysis. So when you see me post analysis, when I give you information, this is what I'm doing. I'm dissecting that, and I'm saying to myself, okay, more than likely we're going to head in this direction. So now the question becomes is how do I get more information to confirm that we're heading in that direction? Okay, so now we're in the 4-hour chart. What I'm doing is I'm now going into the daily. And what I'm looking at the daily is I'm now looking at to see where we're at. So previously we were down at, like, I would say 109. That's what we were looking at previously. You can start to see as you go across and you look left, you have a lot of traffic. So what I mean by traffic, once again, is we have these sections where we've tapped this, I would say at this point, a resistance level many times and over the last day. So these are daily candles. So this is back in March 2016, and now we're April 2017. So you can start to see where we've come and we've tapped those specific areas. So as you start to look on the daily, you can start to see here now we had a bit of a downtrend. So we pushed down, we pulled up, and now we're pushing back down again. So what am I looking for these candles over here? I'm looking to see what's going on specifically in the daily at that point. What happens? The question is, what happens with the news next week? I don't know what happens with the news next week. If I knew, I would tell you all what to do. This is part of your analysis. When you do your analysis, and what I'm doing right now is I'm framing my week. I'm anticipating a direction. If the direction is not correct, I'm not concerned about that because I haven't placed a trade yet. I'm putting in the information into my charts so that when I go and I look at my specific time that I'm looking to trade, I can then do a full trade knowing that I saw something and I can have it develop. And I think that is another issue with everybody is you guys have to let your trades develop. A lot of people don't want to hold trades. They're worried about drawdowns. You have to set your risk management appropriately so that those drawdowns are not impacting your risk management negatively, but it's allowing you to have the trade actually progress and grow. So you can see here right away, I'm going to go back, I'll zoom back out one more time, and I'm going to get, I want to say a support level. So if I look rather quickly on the daily, I would say pretty much we could be at almost a support level at that point. So when I zoom in now into the daily here, you can see we're at 108,295 and 109,822. So if you were to look at this and you were to say, okay, what do I see? Once again, we're in the same situation which we were in the 4 hours. So you know what, if you draw your trend line, figure out, okay, what makes the most sense. Like I said, this is very rough, but it wants you to give you an idea. so that you're able to now take a look and say, okay, what makes the most sense? Now you can see where I drew my trend line. This is outside my trend. Does it matter that much? Probably not. And this is what you have to do when you're doing your analysis. This is subjective. I'm looking at the top area over here and probably the bottom area over here, and I'm looking for where we're getting those touches. And you can see just from rudimentary drawings and from just looking at it exactly, we have multiple touches in a downward trend, and you can say, you know, this is pretty close. This one over here is pretty close. So more than likely, what do we say? What do we think is going to happen? We could technically go back and touch the trend line, or now we could probably just touch what we have in terms of resistance and then push back down. So these are subjective, and this is information that you're going to use to give yourself an idea of what's happening exactly. Okay, so there's some questions here. So what is your approach when seeing the blue line was previous support and not possibly resistance on the daily? I think in terms of this, let me see if I can get this right. Yes. So I think the question is more so of, you know, are we looking to tap that previous line, and if not, what are we looking to do? I think it's more so you have to be aware, and this is part of your analysis, is be aware of where you are in the charts. And what I mean by that is when I draw out these lines, so I have my resistance and my support line. Just, you know, once again, we did this on the fly because we're talking live. I sort of know that if we get up to this level, we may not break it and we may start to go back down. When I get to this level over here, I know that we may tap it based on this sort of little candle there, and then, you know, you have your wick here, which is, you know, probably a kangaroo tail, and then you're pushing back up. So when you're in these areas, so when you're looking at these areas, those are pivot areas, you know, not like pivot ranges or whatever you want to call, but in my mind, those are areas that are important because price is either going to go blast through it or it's going to blast through it the other way. But we don't know until we get confirms. And because this is a daily chart, we can wait 1 or 2 days to get that information at that point. There are more questions. Sorry. Okay, after doing the analysis, can you explain how you would take a trade on the 15-minute or 5? Sure, I can do that. It's a similar approach, but I mean, it's a lot faster, that's all. When you approach those levels, are you looking for candle confirms before entering? Once again, it's not necessarily confirms from candles, it's where I am in my range. Because really, at the end of the day, I mean, once again, I'm gonna reiterate this. My range is 100 pips here. This is basically 1,000 pips. Okay, this is our daily. We have 1,000 pips in between this little area here. This area is 1,000 pips. So if I want to take a trade up here, knowing that if we tap here, I'm going to have to evaluate, or I want to take a trade down here, I'll take, you know, evaluate. But what I'm looking to see is I'm looking to see where we are in that range and how that range is going to fill. Because when you start to evaluate and you start to look at the overall instances of these, if I turn around and I start drawing more lines, you can see here's another set of lines. You can go through, you know, here's another set. So you can start to see as you start to build this out, if you wanted to build out support and resistance the entire time, you can start to see where you draw out your lines. The same patterns are happening over and over again. So you know, as an example, looking at the previous one, you down, up, and then down. So more than likely we'll go up and then back down, no? Because it's the same thing over here. We went up, down, up, down, up, down, up, and then down. So you have to recognize these patterns, but you have to draw out your zones. And this is the reason why people are getting, you know, they're having a losing trade or they're getting stopped out, is because you're not mapping yourself out accordingly to figure out where everything is. You're just taking trades on, you know, as an example, if you turned around and you said, okay, if I look at this chart and I look at USD JPY, okay, this is the hour chart. Okay, we see, there's a down candle. Okay, so, downtrend. Yep, everything looks good. Okay, here's the resistance. Here's a, or sorry, support and resistance. Okay, I think it's going to go down over here, and I'm going to take a trade, and we're going to go there. This is not helping you, because what can happen is we could end up tapping this zone, going back up, and then going back down, right? But if you're not aware of that and you're just looking at what you want to see and, understanding, okay, well, more than likely this wick is going to fill. Like we're going to, we see that these wicks here are just filled because we pushed all the way up. We have this wick over here. We're going to push down and we're going to fill this wick over here. So this candle is going to drop right to here and I'm going to exit my trade, right? So you're at 108.93 and now you're at 108.800, right? So you're going to get to that level and you're okay. But you don't know at that point that it's going to hit that level in the next candle. And that's the mistake that, a lot of people are making as traders, is you're expecting this candle to do wonders over here. You're not looking at the overall picture and saying, okay, this is my support and my resistance area, and I've gone up, down, up. Oh, look, shit, I might actually tap this, go all the way back up, and then drop all the way back down. So you have to be aware of your range and say to yourself, okay, what makes the most sense at this point? In my mind right now, I can see that, this was your lowest point back on April 16th. We haven't come to that point yet. Like we sort of scaled back. So does it make sense that we're going to continue on right now? Probably not. Maybe we're going to pull back up a bit before we slam back down. So these are things you have to be aware of, even though on our longer term trends the hours are going down. But the problem is, you're looking at and saying to yourself, okay, I think it should continue down, but this chart is not giving me that information. Okay, what about the wick being filled? Right, like I said, this is the wick being filled, right? You assume it would fill and then complete, but we don't know that for certain, because when you start once again, and I'll draw out right now, we'll go simplistically and I'll say, okay, where do I think my support and my resistance lines are? I'm going to look, relatively, nonchalantly at this and say, okay, probably this is probably a good area because, we have a lot of touches. We came up almost to touch that area. And then probably right here. Once again, it's subjective. So, I mean, look how much room you have before you come to this area, right? So you don't have a lot of room. So you're at 108.993 and then you go to 108.945. So you essentially only have 100 pips before we go to that area. But once again, when you look very closely, like you're coming into a zone, right? And if we turn around and we do another zone, right? So you can see right away we've got a couple of zones here, but we don't know what's happening yet. We don't have enough confirmation to say, okay, that's what we're doing right now. And you can say right away, the argument can be then, if you want to consider an argument, you can say that, what, we just started the top of this zone here, right? So we tap that zone, and now we're plummeting. So if we turned around and we got rid of that zone and we said, okay, fine, these are our two zones, you know that at this point what you're looking for is you're looking for it to drop into this area here somewhere. Maybe it drops over here into this region. And once again, these zones are never going to be exact because you have a bit of information there that's telling you have a bit of zone there, you have a bit of zone there. So maybe that this zone is not the bottom of the zone, maybe the bottom of the zone is a little higher up. And maybe that this is probably your key zone before you drop further down. But once again, we don't know if we're just going to drop, say, to this point here and then bounce back up. So you have to be aware of that and you have to plan accordingly. So when you start looking left, you start to say to yourself, okay, there are key areas over here that I'm looking at that potentially price can tap and it could give me trouble. Mainly when you're looking immediately left, this is probably your first one here. This one right here is going to give you the most trouble. Then following probably this region over here, and then this region over here. So once again, it's understanding the chart as a whole and really reviewing everything in front of you to make sure that you can make an informed decision. Um, how important is backtesting to me? It's not as important. It's more of reviewing the charts to see if I understand what's happened. Could we use the line charts to set up support and resistance as well? Yes, you could. What if with a break and close of the second blue zone, would you expect further downside? I don't know. Like once again, see, these are questions. When you guys ask these questions and your mentors say they don't know, it's because we don't know. If we knew that, so think logically, if I knew exactly where the charts were going and how they were moving, I would be a multi-billionaire and I wouldn't have to, you literally wake up in the morning and do anything. I mean, not that I do it now, but I'm just saying I would automatically know when to place my trades and when to exit, and without thinking at all because I knew where the market was going. This is the reason why you do this information. When you are doing analysis, analysis is exactly what it is. It's subjective. You're analyzing. You're not giving an answer. Like when I do analysis, I'm not providing you an answer. I'm providing you the foundation to work within that region to say, okay, this is what I think could happen, but if this doesn't happen, then that's when we would move. All right. Do we take trades when price is in the zone? I don't know. Do you want to take trades when price is in the zone? Are you looking to see, are you comfortable with where it's moving? I mean, once again, when you do your analysis, you're looking and you're saying to yourself, okay, if I'm over here in this blue zone and I see that we're in a downtrend, maybe I take a sell because chances are we're not going to break this. But once again, if I know that, let me do this a little easier. So here's an example. So if I'm looking at today's analysis and I'm saying, okay, this is a bit of a downward trend, right? So if we were to say, I'll move this up a bit, give you probably that information, and I would say this is a downward trend. I know right now we're in a downward trend. So this is a potential issue. But what I'm looking at overall is I'm looking to say, okay, at this point, if I take a trade in a downward trend, more than likely, this is where I'm looking to top out at this point. I'm looking to top out over there. Reason being is because of the fact that I see this over here. We only top that back out like the other week. This stuff here is an anomaly, but more importantly, if I go past this area here and we go further up, I'm exiting the trade and I've taken a loss. But this is what I'm looking at is if I take a trade and I take a sell position and I'm looking to say I want to go into this blue zone here, I know more than likely if we push down, we may come all the way back up into this area here before we go all the way back down. This is what trading is. This is understanding trading, and this is where you have to define what you're comfortable with. So you have to, as a trader, and as you're doing your analysis, you have to say to yourself, if I'm taking a sell at this point over here in this blue zone, or I'm taking a sell in this point over here, my anticipation or my initial feeling is we're going to continue down to this blue zone here, just off the top of my head. But if I don't and I pull back, how far am I pulling back in this region here before I exit my trade? Because maybe it pulls all the way back. Maybe I get a bad entry and we pull all the way back before it drops all the way back down. So this is where your risk management comes in. You're not necessarily saying that your analysis is wrong. Potentially you entered the trade early. That is more importantly like what you're looking at. So if I'm looking at a downward trend and I say, okay, I want to, sort of do analysis at this point, and I say I want to take a sell, maybe I put a sell stop below this area here. So when the trade moves through, I know that I've got better confirmation than trying to take a sell order in a market order right here here when I don't have any information. So I know that if I am going to tap this region here, if I put in a sell stop at this point, chances are we're going to go and tap that. I put my take profit in this area over here, and then I'm done. And I didn't have to worry about what was happening over here. And more importantly, if when I'm doing my analysis, if I'm wrong and it taps and then pushes back up here, this trade doesn't matter. I can close that and I don't have to worry about it. But I didn't get stuck in a sell position here, taps and then pushes and reverses all the way back on me, which a lot of people do. So when you build out this range and you start to see what's happening, right away to the left over here, this will give you more information to say, okay, there could be issues here, could be issues here, and when I pull it across, look, it matches up with the zone that we currently have because you can see that those wicks were there as price rejected. Okay. All right, so let's go now and let's take a little step further and let's go into the 15-minute candles. Okay, so now we're in the 15-minute and you can see right now what we have. So we've gone over and we've looked at the hour chart. So we're looking at potentially a downward push in the 4-hour. Now when we go to the 15, you can see a little bit more clearly. I have my support and my resistance lines already marked in from the 4-hour. So now basically what I'm looking for is I'm looking to see confirmation of that drop. So right away we had a huge touch, another huge touch, and then we had a pull down. So I don't know where the market will gap today, first of all, but what I'm looking at in the 15-minute is, here's probably an important zone. This section over here is probably an important zone on the 15-minute. So when I turn around and I actually go through the 15-minute and I look to take a trade, I'm looking relatively to hit this mark over here. Okay, so right now we are currently at 108.993. So more than likely, we're probably going to go over here, and that's 20 pips, right? 993 to 745. So like 250 pips. So that's what I'm looking for over here because I see this information. I see that. This could potentially give us problems. So once again, what could possibly happen, and this is how you do your analysis, is I could come into this region here. So this candle could probably drop into this region here, reject back up right to this region here, and then carry back down. You have to be aware of that. Now, if we get up into this region, excuse me, or we get up into this region, that's a judgment call again, because you have to say, okay, we've pulled back and we've gone now tap back into prior price regions. Is that meaning of the trend starting to change a bit? More than likely not, because we saw in the 4-hour it's still a downward trend, but you have to be aware that, if price does come to this region, you have to make a judgment call and you have to say, I don't want to take more of a loss, but I'm okay with getting to this region to only go back down again. So these are, once again, this is the reason why I tell you to draw your ranges. So you have all this as a range because it allows you to map out what's going on in this entire region and how that's going to help you. And you can then sit in what I'm doing right now. And when people say, you're trading off the 1 minute or the 5-minute or the 15-minute, I'm looking at everything that's going on basically in this region. This is what my focus is because I've already looked at the 4-hour and the 4-hour is giving me information. So now I'm dialed in here and I'm looking to say, okay, what can happen in this small area? So we're down, up, down, up, down, up, down, up, down, up, down, maybe up, then down. So I'm looking in this small region to give me a better idea. But when we talk in the groups and when people go through and do their analysis, everybody has different views on things because, technically speaking, if you wanted to, you could say, okay, I'm going to probably take a buy over here, ride it up to this level over here, and then I'll take another sell if you're that good. Like if you look at Javier, when he actually takes trades, he turns around and, I'll tell you what he does because I know, I can just see what he does based on what he's doing. Here, minute chart. Okay, so right away I'll tell you what Javier does. Javier looks, he's built out his area. He looks over here. huge pull down. So pulls down. But as long as it's not going back up here, he has no reason to exit the trade. So he's riding out minutes, pulls up here, drops back down. So when you see an entry on the 1 minute over here, it's because he's done all the work already to say, hey, that makes the most sense. And, you're able to say this is what's going to happen. But at this point, this is his key. This line here is his key. Providing this information does not, or these candles don't come up back to here, he has no reason to exit the trade because he's still in the downtrend. He can stack more positions over here because now we're starting another downtrend. Even when it pulls back over here, yeah, this position is a negative, but all these positions here are in profit because he's focused on this one candle. He's looked left. Let me draw that here. He's looked left to see that, and then he grabs another drop at the end of the day, right? And that's what you're doing as a trader is you're looking for key points of information. Points of information. Look for those key points, and then look, okay, what's happening over here? If we break this area, yeah, look, we're going back down further, things to that nature. But hey, what's going to happen over here? We don't know. More than likely, we're going to probably get to this area over here. So when you draw out your line, maybe we're going to hit that region over there. Once again, it's a minute chart. It's going to move fast, but it allows you to get information, and you're able to see that quite clearly as you do your analysis. Okay. All right. I think I answered those questions. Answered that. How often do I do my analysis? I usually do it maybe once a day. I do it the night before, and that gives me information for the next day. Suppose a pair is trending and there are both horizontal support and resistance and a trend line. Which do you think would probably give you the most bounce? Okay, so that question is a loaded question. And what I mean by that is you have to determine what you believe is the stronger region. Is it your trend that's stronger, or is it going to be your support and resistance that's stronger? Now, when you look at your support and resistance, what you're looking for is you're looking for multiple touches. So working on the 1 minute chart here, so we're going to be Javier's today and make 5 million in one day. We're going to look at our charts. This is the 1 minute chart, okay? So we turn around, let's ignore this line over here for a second. And what I'm going to do is I'm going to draw out what I believe support and resistance are on the 1 minute chart. So you can see right here, we're ranging, okay? And what I mean by ranging is because you can see that this initial chart here is basically just a range. And what I mean by a range is we're not going up or down. We have multiple touches for resistance, and we have multiple touches for support. So once again, here is your key when you actually go through and you actually work through your analysis. What did the higher time frames tell us on the 4-hour chart? More than likely, we're in a downtrend for USD JPY. The 1 minute charts are ranging, so we've defined our range. So I would be comfortable taking a position anywhere here. I don't care where it is because our range is 109.244 to 109.100 almost. So it's 100 pip, 10 pip draw each way. Not a big deal because what I'm looking at is the higher time frame is giving me that information. And also too, based on when this time was, this is not a good time to trade to begin with, so orders are being collected. So you'll see all this information, and then you'll see one last pull, and then we see the drop. So you could see we had basically consolidation all the way through, and then a drop back down. What did that do? That confirmed with the 4-hour, our 4-hour time frame, right? If you look at our 4-hour, the 4-hour time frame told us we were going down. The 1 minute was consolidating to get that information. So, to the question here is if a pair is consolidating before support and resistance, how likely is it to break that support or resistance? It's looking at your larger time frames to see if we're actually in the trend of going down or up and where we are based on that support and resistance area. So you can see clearly in the 1 minute here as an example, we know we're in a downtrend based on the 4-hour, but you can clearly see here, this is where we touched our last resistance area, and eventually resistance was getting lower and lower, right? So we almost had like a step. We stepped down, created a new resistance area, stepped down, and now we came to support, and we broke support. So support ended up going further down. So now this is our new resistance area. In the shorter time frame, this moves a lot faster, a little bit more violent. But if you have an idea of your overall time frame, you know that more than likely we're going to be in a position to go down. Do we know when it's going to go down? No, because we're not the institutions. But what I'm saying here is as you look at the smaller time frames, you can start to see it build up a bit, and it'll give you a little bit more information. Do I recommend looking at small time frames all the time? No. As a new trader, it's a lot easier as a new trader. Once again, if I go back, a new trader, this is a hell of a lot easier to do because you can clearly see candles and what they're doing than trying to jump back in over here and say, okay, what's happening in this region in the 1 minute? Even in the 5 minute, it gets confusing. 15 minutes a little bit better, but once again, when you look at the higher time frames, it gives you a better idea of what's happening. Now, once again, let's go back into our higher time frames here. And let's take a look. Okay, so you're not going to listen. You're going to all listen to me today because we're just talking about USD JPY, and you've drawn out the same support and resistance lines because you're just going to copy me thinking that you're going to be successful. Now, once again, where are you going to place your stop loss and your take profit? So here we go. So stop loss and take profit. Once again, if I'm taking this trade and I'm looking to go down here, my stop losses are up over here. My take profits are probably in over here. So I'm expecting this to go all the way back up over here potentially, because thinking like an institution, institutions want this price over here. They don't want to take this price over here. And this is why, retail traders such as ourselves, and I was guilty of it too, you make those mistakes and you're like, oh, I'm going to take a sell position here, and then it goes all the way back up and you're like, what the fuck just happened? But it's not that the trend is changing, it's the institutions want the price up here. So when you take a position over here today and you see it pull all the way back, you have to say to yourself, I'm willing to hold the trade up until this point here or up until this point here. But after that, my risk management doesn't allow me to keep that trade anymore. I have to leave. I mean, once again, it's broken my resistance area. We are now pushing further up. I can't hold it, and that's okay. And I think a lot of people, when you marry your trades, you know it's going down, but you want to be that hero and just ride it all the way up just to go all the way back down. You don't have to do that. What I said is you should be looking to turn around and take a sell stop in this position here or over here, and when it does all this and then it starts to come back down, it'll tap your order, go right through, and here's where you take profit and you didn't have any drawdown. So it's something to keep in mind when you're working on your charts and when you're working through stuff like this. Okay, questions. All right, got that. So Javier enters the trade when the huge wick touches the resistance line. I don't know when he enters it, but I'm saying that's probably what he was looking at. Once again, when you do analysis and you start to look at what people are trading, you start to recognize patterns. When you see that he's always taking on large wicks, he's hunting those wicks. All right, would you set sell limits in the upper zones? Definitely. I mean, once again, sell limits, you can do that as well, but why I hesitate a bit in the upper limits with sell limits is because if the trend is starting to reverse, you now have to manage that trade and say, okay, how much do I want to hold that sell limit for? I'd rather trade with the trend and do a sell stop so that it pushes through my position instead of trying to time the reversal of the position. The 4-hour looks like inverse head and shoulders. Do you think that wouldn't hold? I don't know. Once again, we're looking right now, and literally all I'm looking at right now at the 4-hour is I'm focused on this region over here as price tapped. You can see price tapped up here and rejected, but there's still somewhat of a bullish indecision. So maybe we go back up again to tap it again before we go down. We don't know. I mean, once again, what's going to happen in the news? What are we looking at? Trump's been talking. Maybe that pushes the US dollar up again for a bit before we drop back down. Like, these are things you all have to take into consideration. What's my trading plan? How many pips do I want? I know for myself personally, and this is why I'm doing this analysis live, that this is a 1,000 pip range. So, essentially 100 standard pips. So I know that I can get anywhere in between this. So I know if this area here doesn't break and we continue down, I can probably grab pips anywhere here. So I'm watching this area to give me a decision on what I should do with my trade at that point. All right. Yes, it's best to grab trades in momentum. That is correct. All right, so let's keep going through. So as I understand, we don't know when price is going to move to a certain area or zone. How do you manage your time for screen time? Once again, you're set pending orders. Dive into the smaller zones or the smaller time frames. If you're in a hurry and you want to trade, I guess I don't want to say it in a bad way, but if you're limited in your trading time and you could potentially spot setups on the 15-minute charts, yeah, you can definitely trade in the 15-minute windows and grab 10 pips on like 3 or 4 positions. But what I'm saying is, as a new trader, you want to give yourself the biggest edge. More experienced traders can hop around charts all the time. I can hop on a minute chart, I can hammer a minute chart, and I'll be successful. I can also hammer a 4-hour chart. The idea is you have to get in tune with what you're trading, and that comes back down to the fact that you want to trade one pair and learn it really well. What does it mean when we place a sell limit? What it means is your sell limit, you would basically put a sell limit order here, so when price taps and the order would start, it now becomes a sell order, so as it starts to go down, that's when your order would go. The problem with a sell limit is if you take that sell limit and price keeps going up, now you're in a drawdown. Where a sell stop is you would place it below, and as the price starts to drop, it cuts through and the order automatically executes at that point. So it's really personal preference on how you want to attack that. After doing your analysis, how do you take into effect the gap from the weekend? I don't necessarily worry about the gap from the weekend because that's a bunch of orders that are coming through. You'll see, once again, looking at what we have here in terms of support and resistance, if we break either of those regions, I'm reevaluating at this point. So I'm giving analysis based on what I see right now. I'm trading what I see. As things shift, I will shift with that analysis as well. Okay. Yeah, so here the continuation with sort of the timing question. Yeah, you want to trade within the time frames that you're comfortable with and also the time of day that you're comfortable with. Once again, you look for market opens or you look for highest volume. So market opens, New York open, London open, Japanese open. You want to put yourself in a position where you can get those movements. And like I said, set pending orders. You said wicks filling. What does that mean? So wicks filling basically is essentially when you have price that comes up and it pulls all the way down or in one direction and then it has to fill that way. So going back into, let's zoom out a bit here. So if you were to say that we wanted to fill the wick, so you'll see as an example, once again, we're in momentum going down. So we have our downtrend and here is a wick. The wick tapped, pulled up, and then it dropped back down. You can see here, this region over here, we needed to fill that region, so we filled that wick, so more than likely we're going to fill this wick over here. That is probably when you're talking about wick filling. Similar to here, we had price reject, pulled all the way down, eventually the wick got filled. Do we know when the wick's going to get filled? No, we don't. Will it more likely get filled? Yes, based on momentum. But you have to be aware, in a downward momentum or a bear trend, it's probably easier to fill this wick being down than this wick being up, because we don't necessarily know if that wick's going to get filled. So you're looking to have wicks fill in the momentum that you're trading in. And there's a whole bunch of documentation, excuse me, on the Google Drive that talk about that. Yes, gaps don't always fill. How do you determine when price is in momentum? Price is in a momentum all the time. You're in a downward trend. It just means that in the longer time frames, you're moving slower. In the shorter time frames, you're moving faster. The momentum of the candle is that when you're trading with the trend. Yes, we're going to do some analysis. All right. Range being filled. This is your range. This is the range of being filled. This is a range. It's the number of candles in between your support and resistance. Okay. All right. Let's see. Yes, I use volume. You can use volume to determine momentum. That helps you as well. Okay, so let's hear it. Do you think things settle in a day when you say shift your analysis? For instance, pretending you're trading Euro USD, there's obviously going to be a lot of movement during Monday sessions. So I would say this would be the day you would sit out. Yes, that is correct. But then do you just base your new analysis off the day of whatever happened the previous 24 hours? Or do you take into account the pair has been like for the last few weeks? That makes total sense. Your question, and I will answer it now. You are basing information on a news event. And the idea with that news event is you're going to have anomalies because, once again, fundamentally, trading is all about the market's moving. You're making money the reason why the market is moving. So when the market gets shocked, there's going to be violent movement. But once again, you have to take into consideration in that analysis, is that sustainable for economics in the world, in the country, in business? So you're going to get a shock, but it may not be something that's sustainable. So price will return to the previous levels it was at, or it'll move a little bit slower again. You have to take that in consideration. So when you see anomalies in the market, which I consider anomalies, which are news events, a news event doesn't necessarily 100% shift the market. The market can't move in 1 hour like 10,000 pips and sustain that level. It doesn't make any sense. So you have to think logically. If you suddenly see the dollar, like a US dollar, drop 15 or 20 cents, that's going to ruin the US economy because they do trade. All these things take into factor. So if you're not understanding what is going on behind the scenes, my suggestion is you read a lot of economics books so you understand that just because there's a news event doesn't mean that it's the end of the world and that price is going to slowly shift in a new direction. There has to be a cataclysmic event to move that market in such a violent direction. You might have for an hour or two or even a day, but after that, everything has to settle back down. Is this going to be recorded? Yes, and you'll get a copy sent to your email because I set it up that way this time. I was smarter, so people don't bother me. Okay. The question was USD, sorry, USD Euro, no, JP pound. Okay, all right, so here's a fresh chart. We're looking at the pound USD, okay? So right away here, I don't see anything. And the reason why I don't see anything is because I don't have enough information. One thing I do see though, and I can point out right now, and probably everybody else saw this, and once again, so here's the thing, when everybody sees the same thing, you have to account for that. This this is what I saw. So this is your new price area. Okay, so this is your new zone on the 4 hour. So we tapped into that price area, and then look it over here. Okay, so let's do this. So you can see right away we have two price areas. And that you would want to focus on right now in the pound US dollar. And the reason being is because essentially we had a bit of a movement, then we had a huge push up, and now we're having a push back down. But you can see here, there's a little bit of zone here. So in a 4 hour, you're looking at right now, price is at around 128. We have 125. So you have basically almost like like a 3 cent movement that you can look at in terms of this. But what I'd be focused on more, and I'm going to zoom in to give you a little bit more information, just off the top of my head, when I start to zoom in, now I'm starting to build out my support and my resistance. So right away, this is going to be my resistance level. Probably over here would be my support level. So if I want to cheat a bit, what I'll do is I will go into the daily, and now I'll get myself a better idea of what's happening in the daily. So you can see here, we tap this region all the way across. Just by drawing this out, you get a good picture of what's happened. So now I can look and I can say I anticipate we're going to probably have a little bit of correction, but more importantly, when you start to go through it, look left, look left. This area here is going to give you trouble over here. Once again, historical prices, December, January, we came around the same place, so why aren't we going to come around here in April? So when you look and you're saying, I'm taking a sell, be aware when you come to this point here, it's not going to just plummet. There might be issues where it has to come back further down. Once again, this is a daily chart, so it's very hard to break support and resistance in daily charts unless there's big events happening. So you have to be very careful and you have to be aware of what's happening in that. And you can see we tapped price several times. So let me go and zoom in a little bit more. Uh, we tapped price. So we tap price here a couple of times in this resistance area and then we reject it. So now we have to figure out, okay, what are we getting with that information? Now what I'm going to do is let me erase all this. Now we're going to go into probably our shorter time frames and get a little bit more of an idea of what's happening. So right away, we've been consolidating. So you can see we've been consolidating for almost a whole week. In my 15-minute frames, here you go. Here's what we're looking at. We're looking right there. We got information right there. So more than likely, what are we looking to do in the 15-minute frame? Probably go back up to this resistance area. So now you're at 128, 128.0, 128.4. So you basically have 400 pips to grab from. This is probably going to give you this is going to give you a headache. This little region here is going to give you a headache. So, but you can see right now as you start to evaluate what's been going on, more than likely we've had, you know, down, all the way up, down, up, down, up, down, probably up. These areas over here were your tests where they touched. Price was rejected, so more than likely it's got enough liquidity to further push through. But once again, if we come down over here, you know that it's going to test this region over here, potentially bounce off this area and go back up. Or if we don't, now we're dropping. Because you can see on the left side of your chart, you have a lot of room for movement at that point because there's not this traffic down over in this region. This is all empty. So that's why when I say look left, that's the information that you're trying to pull for yourself to give you a better idea of what's happening at that point. Yes, so the pound moved up in shock. Way, would you say come back down? It should come back down to be a little bit more support depending on what it is. What is the most important mindset as a trader? Confidence. Do you think chart patterns are effective? Like anything's effective. I think you have to figure out what works for yourself. Like I don't even understand half those patterns. Like people talk about head and shoulders, all those other. I don't look at that. All I'm looking at is, you know, just simplistically what's going on in the market. Like what happened over here. You know, what happened over here. Like that's all I'm doing is I'm looking at just what's going on in certain areas, and I'm anticipating movement based on that. You know, and I'm looking at in terms of just from my history and from my experience, more than likely we're probably going to go back into this region over here. And when I trade and when I do my analysis, and hold on a second, let me get in a little closer. Like if I'm looking at this pair right now to trade, I'm looking in over here and I'm saying to myself, okay, if I today was to take a trade at this point over here, if it gets to this price region over here, like so if we trade to get to this level over here, so we go up right to here, that's my exit point because I see just in my screen right now, so just in this section here, I see that this is my highest point. So if I'm looking to take a trade, I'm looking to take a buy, I'm exiting over here. I don't need to gamble and see if it'll pass this point. If it does, great. Maybe I'll set my stop loss to above break even and let it run. And alternatively, if I'm looking again at this square here and I'm saying I'm going to take a sell and I'm going down here, more than likely I'm going just to this region here because look, we had big rejection here. It dropped hard and then it pulled all the way back up. So you have to remember that when you start to look at different things, what you're anticipating is going to happen at that point. Okay, I think I just explained where I would exit and where I would enter. All right. So, I mean, once again, looking at different things and what we're looking at, this is sort of the information that I pass across to everybody. What I'll do now is let's look at gold because obviously a lot of people trade gold, and we'll take a look and see sort of what's happened with gold in general, and I'll sort of show you my charts at this point. So once again, here's gold on the daily. So this is sort of what I mapped out for myself weeks ago. This is my go-to chart because this gives me information on what the hell is happening, and this is the reason why when I trade gold, I'm fairly profitable with it just because of the fact that I've done this for myself. This, for me, this section here is a very key section because now we're at that section here, okay? The reason why I say that is because this wick here is a super huge price point. And the reason why I'm watching this carefully, because we have to really get a lot of momentum to break that. We have to break that. And 1300 is, I'm pretty sure, right about here. That's a key level. Psychologically, just in general, because it'll make the news. When gold breaks 1300, it will make the news. It's a psychological level. So when you think about things like this, if you're trading gold, you have to think about psychological levels. So if I turn around, I probably can get that exact level. Yeah, so if you ever want to get your points exactly on where it's supposed to be, you just do that. Go into your objects, edit it, and then go into edit and go to parameters. You can change the thickness, whatever you need to do. You can type, this is key support or key level. So, you can give yourself that information because now, like I see here, it's like a key level at 129982, but it's technically 1300. But that's what I'm saying. So when you start to look at this, we've already sort of we've already broken a resistance, tapped it, and we've pulled back a bit. When we start to move further up, you can almost say, as an example, right now with gold, that this is a consolidation region. This is a consolidation to go further up. When will we go up? We don't know yet, but you can say that based on sort of what's happening here, we're ranging a lot on the daily to get that movement up. And that's where we're looking at 1300 as a key level to move to. Yeah, so that was the election wick. So that is, once again, a key level to go through at that point. And the question, the comment was the election wick. This was from the election when Trump got elected. That's where gold spiked and then pulled back down. So it's a key level. So we're coming into a key level again when you're doing your analysis. So now when I go back and I say to myself, okay, what am I doing in terms of my trades this week? I'm turning around and I'll jump into the 15-minute charts, and now once again I can start to see more key levels. The 15-minute chart gives you a lot of information, and I'll keep it out a little bit expanded because now when I start to move and I start to maneuver, you can start to see we had like a 1290 level, and then basically at the bottom here, um, you have essentially, give me a second here, you have like a 1279 level, 1280 level. But what I want you to pay attention to, and this is where a lot of people, including myself, got caught, is all these wicks. All these wicks, price was testing. So you can essentially say that here, in this section here, is one big price region. It's one big premium price region that people want to tap to move further up. They want to get these taps. You can see here how many times it was tapped very violently to pull back out. So you know that 1279 in that region, that's a very, very hard support at this point. People can turn around and say at this point, you can look at it and you can say to yourself, okay, but it dropped all the way to like 1274. Yeah, but this was in a 15-minute range. So this was very quick. But what it does is it lets you know the price region that you're in at that point is being rejected a lot. Because it got rejected here, that's maybe an institution just pulling orders down to get the best price possible. But you can still see here, we still had decent price. Once again, we had decent price, and then we pulled back up. We got to a point where now everybody was happy with their profits and they exited and pulled back down. So more than likely, if you wanted to say, if you wanted to do analysis on the 15, what you would say to yourself at this point is, we're consolidating here, more than likely to come to this price point and then pull hard up, right? Because this is a big rejection candle. We had rejection candles over on this side. So that's what you're doing. And you're looking left and you can see where we've rejected a lot at that point. And even over here, we've rejected too. So that goes in line with sort of what's happening on this side over here. So as you start to do your analysis and as you start to see what's happening, if you start looking left, it's going to give you that information to help you out there too. But once again, I'm not going to worry about that until I actually look at taking a trade, but I've mapped out sort of where I want to go and how I want to approach this week in terms of my trades. Okay, so the question is, so if it rejects majorly from the bottom and shows significant rejection from the bottom side, it means it won't fill, right? It probably won't fill right away. So that's the other thing too. It's not going to fill as fast as you think it's going to do. But I mean, once again, it's just to be aware that if you had that lower spike and if you had drawn out your range, so this is a perfect example of mapping out your charts. If you had drawn out that, you had drawn this out and you saw this spike over here, as soon as it pulled back, more than likely over here, you could have probably taken a buy position and you knew that it was going to be on the upswing because this was a key level that was being rejected the entire time, right? Similar to here, you knew right away as soon as it hit that key level, it pulled all the way up. So it's just things to be mindful of when you're trading. If you draw out your zones or your ranges, like I do, you'll be able to map that out and say, okay, more than likely we're going to be moving in an upward direction or we're going to move in a downward direction at that point. So it's very important to give yourself a frame of reference, the understanding of what is that exactly is happening in the market. I mean, once again, as you start to examine, you can say, okay, this is our lowest point, but you can see slowly we've sort of built a stair. So now we have another stair, and then we come to the top where we have to start back down again. We have to go down just to exhaust price. Okay. Are there questions? I think that gives people a good idea of what's happening. I think provided a little bit of analysis, give you a little bit of insight of what's going on, but more importantly, how to dissect what you want to do in terms of your analysis. And like I said, pending orders are great for you. Looking at the higher time frames really give yourself that edge where you can see what's happening in the real time frames, but also be aware of what's happened previously in the past to give yourself more of an edge as well, because you know that more than likely price is going to go back to a certain region again, but when it goes back, we don't know exactly. It's more of anticipating that movement and saying, okay, this is where we should be heading off to at that point. Okay. All right, I'll stick around. We'll answer some questions. If nobody has questions, once again, you'll get an email to your email address. So when you signed up, you'll get an email to this, and I'll also put it in the vault, so you'll have that there too. But if you signed up, it'll be there as well. Can I do analysis on Madrid versus Barcelona? Nah, I can't. I don't know too much about football. Awesome webinar. Yeah, okay. Miro's hilarious. All right. I think we're good. I don't see any more questions, so I will stop this in the next few seconds if we're good. Okay, there was a question about confirmations. Okay. Confirmations, it's really up to what you want to do in terms of your confirmations. So the question is, can you explain confirmations? So what I'm looking for in terms of confirmations, it's not necessarily written in stone, but it's more of understanding what is exactly happening. So as an example here, I see that this is a price region, right? So we're looking at gold on the 15-minute time frame. I believe gold is going to 1300, so I have a slight bias. I believe it's going up. We see a bit of consolidation over here. Okay, so my confirm is, okay, where do I want price to go? I want price to at least fill this area here, just because I believe that that's a key price point. But then I'm also aware of like this little section here. So what I'm doing is I'm not necessarily looking for confirmation because I have confirmation on my direction. I see that these wicks are forever growing in an upward direction. So we have an upward trend at that point. So what I'm looking to say in this example is trading gold is I'm looking for confirmation that the trend hasn't broken. So if we were looking overall, I can see, clearly here the trend hasn't broken, clearly here the trend hasn't broken. So I would take a buy to get to this level here. That's what you're looking for in terms of confirmation. It's not necessarily the candle formations, but it's to see that we have some sort of a pattern at that point. Is the first day of trading usually not a good day to trade because the market hasn't moved much? That's correct. It's a little slow. I mean, you can still take advantage, but I mean, the market's setting up, so you might get lucky and move in that direction. Um, does it matter if we enter trades between candles? Not necessarily if you're comfortable doing that. How do you approach a trade when you see a lot of spikes in it? I'm a little bit more cautious. I'm not necessarily looking to take those trades because it's probably not a good time. I'm looking to see more of a pattern and I'm looking to make sure that it fits my range. So let's go ahead and look at the pound Japanese. I guess I'm not done yet. Okay, give me a second. I haven't looked at the pound Japanese. A lot of people trade that, but I don't. Okay, so 4 hour. See, like I'm looking at it right now, I don't get any information. Okay, this is a little bit better for me. Okay, so right away I'm looking at the daily chart on Japanese, and I'm going to do this right away. So I'm going to see, yeah, that works. Something similar to this. I'll look at what's going on over here. So we have a downward trend. When we start to go through it, we start to see a little closer that we had a little pullback. I'm assuming at this point over here that this is probably our biggest price ranges. This is our top level. So, we still have that downward trend. So now what I'm looking to say is, okay, in terms of what I'm doing with the pound Japanese yen, is I'm going through, I'll map out what I consider it's even hard to do here. It's like this is the thing, right? Like when you start to look at things, it's okay. So I think, hmm, this is very, very tough to trade. Um, Give me a second. I have to think about this. I really don't like this chart. Uh, yeah, okay, I want to do that. And then this one's probably going to be a little easier. Yeah, okay. So that's a little bit better. But see, now you see, like I like someone asks me a question on the fly. This is sort of my thought process. Like what I'm doing, what I just did there is I evaluated stuff. So right away, what I was doing, just because I wasn't thinking out loud, and I apologize, is I was looking for my initial resistance because I was looking at this area over here. And then my support was a little bit easier because I saw like multiple taps over here, and then finally over here. All right, so support was a little bit easier than resistance. I mean, you can make an argument looking at this. You can make an argument for resistance probably up here too, just because once again you have this region here, but I think I don't see it going to that level again, and that's sort of the reason why I sort of took a bias towards the way I drew my first two lines as I did my analysis here. Like I don't. Oh, okay, let me do this. So it doesn't move. Like this, I took my bias there because I just saw, as I zoom in now, zoom in, you can sort of see there's a lot of traffic getting tapped at that point. We may come back through into that region, but more importantly, this is a huge range. This is like 140 to 136, so that's a really big range on a daily. So there's a lot of room for movement. So I can see why, when the question was asked, there's a lot of spikes, because probably when we come in, yeah, you can start to see as we go through the hour charts and things like that, you can see all those spikes. So, like I'll dive down into the 5 minute and I'll take a look at the 5 minute right now just a heads up. You can see right away, let me see if I can do this a little bit better. Yeah, like this is just Oh, this is really violent. Like, I don't know how you guys trade this pair. Um, so if I'm drawing out ranges, yeah, that, and then like, and this is the thing too. Like, I'm once again I'm talking on the fly, but I'm drawing out key levels because there's a lot of movement where it's going to help me in terms of doing that. Like here, like I drew this key, what I would consider like support resistance, and then the next one, because then that'll give me an idea. Like this is a price point, this is a price point. Over here's price, over down over here's price. But more than what I'm seeing is, we tap this zone, we may pull further down into this region over here in terms of what's happening. But because it's so violent in terms of the wicks, it's easier sometimes to give yourself a little bit more information. So that's why I drew multiple lines, just to set myself up to give me more of a visual cue. Like I can say that, as an example, this is a region, then this was a region, and then this was a region, right? So I have like three levels that I can look at to see where I'm going, and I know if it goes to that region, that more than likely I'm going to go probably to the lowest one, or once again I'm going to go to the highest one, or I'm going to go over here. So that's sort of what I'm looking at with this. It's a 5-minute chart, so it's a little bit more violent, but that it gives you an idea of what's going on there as well. What would you do in a pair where a 4-hour shows an uptrend, for example, and a 15-minute shows the opposite? Well, that's actually a very good that's a good point for you to be. If you have a large trend and it's a downward trend and your 15 minutes showing up, that's a great time to take a better price. Okay. Do you think the French election today will have a high impact on gold tomorrow? I don't know. I think it'll have more of an impact on the euro than anything else. Uh, How do you define good and bad market condition? It's more of if there's a ranging market where we don't have clear direction and there's low volume. Euro USD was the question to look at. Okay, so let's look at Euro USD. Once again, the elections are tonight, so we're going to have issues. So once again, this was drawn like I think probably like last week when we did when I did like live IG, like not last Friday, not this Friday past, but the previous Friday, because somebody asked about this, and you can sort of see it still makes sense today. So let's take a look rather quickly at where we want to draw out things. That looks good, and yeah, this is actually a little cleaner. Like Euro USD is a little bit cleaner, so let me get rid of these trend lines because I don't want to do that. And you can start to see, so this is the daily on Euro USD, right? So you sort of mapped out probably a decent range. Once again, this is like 10079, wow, 1005. Yeah, so this is like, once again, like a 2 cent move. So it's a big range. So when you start to look at that, you can start to see, once again, as I've zoomed in, key things that I'm looking at is, this area over here, looking over here, looking over here, looking over here. Like these are things that I'm looking for right away, like things that are gonna, like my eyes see right away. And as you become a more comfortable trader, you see those things right away in your eyes too. So it's just a matter of saying, okay, now what do we think is gonna happen? So now I've drawn out my range for the daily. Now I'm gonna drop probably into the 15 and get a better idea of what's happening here. Okay, so I said the daily is still ranging, but it looks like we're in a downward trend, right? Because I can see from here, oops, wrong one. I can see right away we're probably in a downward trend if we want to use that as your trend line. So we've tapped a major zone here and we've pulled back and tapped down. And once again, we're going to potentially move in that direction. So let's go to the 15. Yeah, so the 15 gives us the same idea. Still tough to make a decision, an overall call, just because, let's see the hour. What's the hour? Yeah, I'm still a little nervous about it because we're getting these zones. So when you start to look at the hour, you get a little bit of the zones here, but then I'm worried more about like this pattern because like we haven't really gone back down. We're still moving up. So there's a little potential for upside with Euro still, but we just got rejected here. It's now now you're waiting for more candle confirms. Like I don't have enough confirmation here to make a trade in terms of the candles, because once again, when you're looking at this area here and this area here, you know, you can say this area here, we had a drop, push, up, down, up, down. So more than likely we should go back up, right? Just based on what's happening over here. But now, you know, to the previous question that was there, what happens when you have conflicting analysis? When we look here, we tap this range here on the daily. So maybe we pull back up and then we pull down again. So it's just a matter of getting that confirmation of, you know, the overall trend looks down, but you know, what are we going to do throughout the week? Are we going to get a pull up still and then a pull down? So that's when you drop into your like shorter time frames. Even the 15 minute seems to be have rejected this price point, but what I'm looking at overall is this area over here, right? So if I'm in this region here, I'm more than likely going to wait for a candle to come up over here. If I see a candle come here and it pulls back through this, what I would consider minor resistance, I know that we're going to probably go back up here and we're going to match up with this level over here, just because you have this as your guide. So you know, when I talk in the chat rooms and I talk about, you know, issues, this is an issue and this is an issue. And the reason why I say it's an issue is because price is going to tap, it's either going to push through or it's going to reject. But we don't know until we get more candle information, right? You don't know. It's the same thing here, right? Like you could take a trade on this candle and watch it go down, but I'd probably take trades over here, wait for this candle to fill, knowing we got a full rejection, going right back down, probably look again here and then pull right back further through, right? So it's just understanding that in terms of where you are with the candles, and that's the kind of information I'm looking for. All right, one of my struggles with trading is I lack confidence in trend lines the way I draw. Any suggestions on how to be more confident? Yeah, more screen time will help you. What pairs do you mostly trade and why? USG, JPY, and gold, because it's during the North American session and they have the most movement then. We close lower than those previous wick candles. So you really have to wait for a confirmation. If it doesn't have a clear path, of course it is. How are you drawing with your cursor? It's the webinar allows me to do that. Yes, let's go pop bottles. Okay. All right, so with that being said, I'll let you guys go. And if you guys have questions, obviously we'll go through them with the chat. These will be recorded. You'll get a copy of this shortly. And like I said, I'll do some more analysis. I'll drop actual PDFs in there of sort of some of the things that we talked about. But I just wanted to go through this with everybody just to give you my thoughts. And I mean, like you said, I saw a couple of charts here people gave me and I was stumped. It's not a big deal to be stumped, but this is when I start working through the chart and this is how I dissect it. And you saw, like, I wasn't looking for sort of patterns, things like that. It was just more of, you know, what do I see? Like, what are key points? And going through that at that point to see where we're going. All right, and we will connect if you guys have business ideas and you know, you have entrepreneurial spirits. We can do MLM connections too, right? You know, you guys we'll all make residual off each other. There's questions. So the longer the wicks, the better the key points. Yes, it is. All right. Have a good day, guys. Enjoy your day, and we will chat in the chat rooms.